What if I told you that one of the world's most powerful oil giants, ConocoPhillips, might be sitting on a gold mine of potential right under Wall Street's nose? Sounds crazy, right? Especially when energy stocks seem like yesterday's news to some younger investors. But here's the thing. Markets don't care about trends. They care about timing. And right now, something big is brewing in the oil sector that could flip the script. And if you've been sleeping on ConocoPhillips, you might be about to miss out on one of the most underrated plays of this decade. This isn't financial clickbait. This is a strategic breakdown for investors who want to think long-term, build real wealth, and avoid FOMO disasters. So grab your notes, because by the end of this video, you'll know exactly whether ConocoPhillips is a dinosaur on the brink or a sleeping dragon about to roar back to life. Let's dive in. ConocoPhillips, ticker symbol COP, isn't your average energy stock. With a legacy dating back to the early 1900s and operations in 13 countries, this company isn't just drilling oil, it's fueling economies. But let's be real, this stock has been a roller coaster. Crude oil volatility, geopolitical shocks, environmental pressures, and that little thing called the energy transition. Back in 2020, when oil prices hit negative territory, yes, negative, investors jumped ship like it was the Titanic. COP's stock took a gut punch. People whispered, "Oil is dead." Sound familiar? But here's where things get interesting. While others were panicking, ConocoPhillips was pivoting. They cut costs, sold non-core assets, doubled down on high-margin regions like the Permian Basin and Alaska. Then, in 2021, they made a bold move, acquiring Concho Resources for $13 billion, giving them serious scale in shale. They didn't just survive, they evolved. Let's break it down. Financial strength. ConocoPhillips boasts over $7 billion in free cash flow. Their debt is low, dividends are rising, and share buybacks are in full swing. This isn't a company drowning in oil, it's swimming in cash. Their diversified portfolio across Alaska, the Middle East, and Asia shields them from single market risk. It's like having a financial VPN for your portfolio. Quick question. If ConocoPhillips can survive negative oil prices, recessions, and political blowback, what's your excuse for not surviving a $9 Chipotle bowl? Anyway, the energy transition bet? Yes, they're still heavily in oil and gas, but unlike many competitors, they're not pretending to be a solar company overnight. Instead, they're investing in carbon capture, hydrogen, and efficiency, betting on a realistic energy mix. But here's the wild card. What happens if oil demand doesn't decline as fast as predicted? In fact, some analysts now suggest that oil demand may peak later than expected, or not at all. You might be holding the next big comeback stock and not even realize it. Now let's get tactical. Bull case. Energy demand is surging in developing economies. Geopolitical instability keeps oil prices volatile, in a good way for producers. COP's dividend yield is attractive compared to treasuries or tech stocks, but bear case. ESG pressure is real. Funds may continue to divest. If we hit a global recession, oil prices could collapse again. Government policy could turn on a dime. So what do we do with all this? Here's the mindset shift. Don't think of ConocoPhillips as just an energy play. Think of it as a hedge against economic instability and a cash-generating machine during inflationary periods. Still wondering if this is the comeback of a titan? Well, the CEO just hinted at a game-changing development strategy during their last earnings call, something that could send the stock soaring if executed right. But most retail investors completely missed it. Stick around for a future deep dive on that one. You won't want to miss it. So, will ConocoPhillips make a comeback? The truth is, it's already happening. But the real question is, will you be positioned to benefit from it? Or will you be watching from the sidelines again? Because in the next few years, the biggest wealth transfers won't happen in Silicon Valley. They'll happen in places most of Gen Z and millennials aren't looking. Now, if you're serious about building wealth, it's not just about stock picks. It's about how you manage your money. Tap into your next move by watching my video, Budget Like a Millionaire in 2025. It'll change the way you think about money forever. This is your time. Build smart, live wealthy. Until next time, stay strategic.